Hey everyone, we're going to be going over Chapter 10, Protecting Revenue. So we'll identify and explain the three parts of a revenue collection system, list the external and internal threats to revenue security, explain the basic control standards to safeguard cash and credit card information, describe the 4 steps in the revenue security system, explain several ways to discourage theft by employees, list 2 important areas affected by accounts payable, describe the steps in verifying the receipt of goods and services. So the importance of revenue control. Revenue, that's the money you're bringing in. So all businesses must guard against the potential for fraud and abuse. In restaurants, this includes dishonest employees as well as customers. This includes dishonest customers as well as your employees. It is extremely important for each restaurant to develop procedures, policies, and systems to safeguard the money generated by the operation. So 3 parts of a revenue collection system. Charging the guest. Make sure the guest is being treated fairly and honestly in each transaction. And be careful not to overcharge or undercharge. Collecting the revenue. Take the money from the customer. Make sure to keep track of the employee collecting the money. And then protect those cash assets. There are a number of different processes to assist in accomplishing this. So some external threats to revenue security. One of the primary external threats is the guest. They may try to skip out or use counterfeit bills, use a stolen credit card, or even write a check for a bank account that is empty, or even stolen. It is very important for all establishments to train employees on what to look out for when dealing with these threats. Some internal threats to revenue security. The primary source of internal threats are employees. They may steal from you or even from the guests. A good hiring process and internal controls will prevent this from happening. But a general rule is 10% of people are honest no matter what. 10% are dishonest. And the other 80% will remain honest as long as they are afraid they will get caught. So enhancing revenue security. So we're talking about safeguarding the on-premises cash, what you have in your safe and in the registers. The number 1 rule in controlling cash is to make sure everyone who receives cash is not also able to take the register reading. A manager should be the only person able to void register overrings and mistakes. Then all transactions should generate a receipt that should be presented to the customer. And safeguarding cash deposits. The bookkeeper or accountant should never be able to handle the cash. If the same person has access to the records and the cash, it makes it very easy for a dishonest person to steal and then be able to cover up the theft in the books. And safeguarding customer payment card information. When safeguarding credit card information requires being in compliance with the PCI Data Security Standard, which sets standards pertaining to network security and the storage and handling of customer card data. The 4-step revenue security system. So revenue security starts with verifying product sales, moves on to verifying the amount the guests were actually charged, then verifying the payment was actually made, and then ends with the verification of bank deposits. This is a sequential system where the manager matches the amount from the previous step and detects any possible discrepancies or errors. So no matter the size of the operation, the revenue security system needs to satisfy the following equation. Your product sales equals the guest charges. Guest charges equals payment, and payment equals your sales deposit. So 1, verifying product sales. This step matches production, your kitchen issues, with your sales, your guest checks. Issues of direct and stores from the kitchen should match up with what is recorded as sold on all guest checks. 2, verifying the guest charges. Match guest checks with actual guest charges. This is either done by reviewing either a shift or server or both. Any discrepancies found should indicate a specific employee during a specific shift period. Verifying payment. It needs to be ensured that all payments are made correctly and that cash, discount coupons, and credit card slips are stored securely and accounted for. When we talk about cash control, the cash drawer should be accounted at the start and the end of the shift. This should be done by management and also the employee if they're the only one on the register. That way you're able to hold them accountable because they counted the money. They knew it was there. Coupons and other payment forms. There is also discount transactions and comp meals that need to be recorded. Stapling coupons to receipts and signing discount receipts are a good habit to have. Verifying deposits. After payments are verified, the last step is to make sure the bank deposit is accurate. It is recommended that only one manager be able to do so. So we're talking about verifying cash. Make sure daily bank deposits are made. Ensure that individuals making the daily deposits are bonded. Written policies for completing bank reconciliation should be established. Review and approve bank statement reconciliations monthly, and maybe even think about employing an auditor or an accountant to examine that everything matches up annually. Now, payments with credit cards and debit cards. If a POS system is used, the report is automatically generated by shift or the register, and again by end of the day. Now, if you're using a separate terminal, you'll need to do this manually. It's not going to do it when you close out a drawer or anything. You'll have to go to the terminal itself, functions, and there's lots of options and different reports you can run from the terminal itself. So cash audits, your server and cashier banks. So a bank is just enough bills and coins assigned to a cashier or a drawer. The amount is dictated by projected sales and sufficient enough to make change for the guests. At the end of the shift, a sales report or reading is generated for that register. The drawer is counted and the beginning bank is taken out. What is left should match the reading. We're going to talk about petty cash. It's a small set of money. It needs to be a small set amount of money needed to handle minor cash disbursements. It's commonly used to replenish registers and payouts. Always keep receipts for any paid outs. And the same with petty cash. So if you are replenishing a drawer, so let's say you run out of pennies. So you need to make sure you give $1 to petty cash and then you take out 2 rolls of pennies. Everything needs to be accounted for when it comes to the petty cash. So managing accounts payable. Accounts payable represents the amount of money that an operation owes suppliers from which it has purchased goods or services. Kind of think of it as, your credit card. You're buying everything on credit. How the manager handles the accounts payable affects 2 important areas: your cash flow and supplier relationships. So if you don't have an account with them and you're just paying them out, that's going to take away from your cash flow. Now, timely payments to suppliers help maintain good supplier relationships. So if you do have an account with them, there's going to be certain times, maybe every 15 days, every 30 days, you need to pay off your account. And the more you do that, the better relationship you have, the more time you are on it. In addition, paying invoices on time allows a restaurant or food service operation to benefit from supplier discounts and incentives that reduce food costs and increase operating cash flow. Verifying receipt of goods and services. In this verification process, a purchasing agent first matches the purchase order with the purchase invoice to ensure that the invoiced amount is correct. If the amount is correct and the product has arrived, the agent approves the invoice by signing off on it. If there are any variances in the invoice, the purchasing agent should request a credit memo to account for these adjustments. Once the invoice is approved, it is posted on the accounting system for payment processing. Lastly, some ways to discourage theft by employees. Follow best practices when it comes to hiring employees. Maybe have certain questions that will encourage them to be honest about how they would handle some situations where they might be presented with an opportunity to steal. Conduct a thorough background check and interview all job applicants. Test applications for job skills. You'll see this a lot for anyone who handles cash. Make sure they have basic math skills. Even if you're in a kitchen, you will have a working interview. You need to go in and make them something, and that will show your skills, and you'll be able to your thoroughness. Yeah, basically your skills. We'll leave it at that. And create a positive work environment to help reduce fraud and theft. Implement internal controls to increase the actual and then perceived chance of an employee getting caught if they attempt to steal. That is it for this week. Please email if you have any questions or comments. I hope you guys have a great week. Thanks. Bye.